It's almost 1 p.m. in Sydney and 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian stocks following Wall Street to their worst day since the August meltdown. Worries about US and Chinese growth fueling a flight from risk and sending commodities tumbling. Chip makers bearing the brunt after Nvidia's record plunge on fresh worries that the AI frenzy has gone too far.
And I'm Annabelle Drawlers, live at Semicon Taiwan, where global tech leaders are gathering with the AI boom or bubble debate taking centre stage.
OK, we'll get back to Taipei shortly, but for now, let's check in on how markets are faring with Avril Hong in Singapore. Avril.
Yeah, Paul, AI boom or bust? I think that is the question of the day. Today, it is a bit of deja vu from the August meltdown after we saw that US sell-off, the S&P 500 declining by the most since the meltdown last month. And today in the Asia Pacific, its peers are just following suit. The worst sell-off on the Kospi, the Nikkei, the TAIEX since a month ago. And tech is really getting hard hit here amid these concerns that the AI rally has gone too far, too fast. Of course, not helping things along is the data that we got from the US overnight that kind of exacerbated the concerns over growth, over monetary policy. And then you had two top industry analysts from JP Morgan, from BlackRock Investment Institute, kind of questioning the AI rally, whether it can be justified. If you take a look at the S&P 500 futures, it looks like the selling is not over yet. The mainland benchmark seems to be faring a little less bad compared to everything else. And it's essentially a day where investors are just taking all risk out of the table. Look at where Brent and Bitcoin are faring. But let's flip the board, because the damage to the chip stocks was really extensive. It wasn't just Nvidia overnight. We saw the Philadelphia Semiconductor Index declining 8%. This was the worst since March 2020. And today in the Asia Pacific, we're seeing how these chip names are getting hit. You have the direct suppliers to Nvidia, like Taiwan Semiconductor, SK Hynix. These are the ones that are really bearing the brunt of the selling. Flip the board again, just to give you a sense of the extent of the selling. Overnight, it was a wipeout on Nvidia of about 10%, and this translated into market cap wipeout of the worst that we've ever seen on a US stock, even eclipsing what we saw on Meta in 2022. Of course, in after hours, a further decline, and this is after we got news about the DOJ subpoenas. Now, let's get more on the sell-off and growing concern around Nvidia and other chip makers with our tech reporter Annabelle Drawlers, who joins us now from the Semicon Taiwan event. Belle, why are we now seeing this rising concern among analysts over the outlook for AI? And does that track with what you're hearing on the ground at the conference?
Yeah, well, certainly those two notes overnight we had from JP Morgan Asset Management, BlackRock Investment Institute, telling us that perhaps all of this hype around AI could be a bit overdone. And you added, as you were just discussing there, those weaker economic readings, not only in the US, but China. So recession fears certainly prompted that sell-off in Nvidia. The question, though, of whether the AI hype is overdone is certainly, of course, one of the very key talking points here at Semicon Taiwan. But what we've been hearing across the week in Taipei is that, again, we're just in the early innings, which is something that Jensen Huang has said. This is an industry that's looking to grow to $1 trillion just in the next several years. And so, of course, it's really about trying to find applications beyond AI cloud service. And this is something I spoke with the IMEC president and CEO about. This is the largest R&D facility for semiconductors in the world. Take a listen.
This is just the start of a trend that is going to last for so many years. We're talking about cloud AI now, building up these capability in the cloud, but we will see a major trend also towards like edge AI, where all our devices will become full of AI. Think about autonomous driving, think about robotics, think about the application of AI in healthcare. So in these kind of domains, things go always with ups and downs, but there's definitely a very long-term trend for massive applications of AI, so I'm not so worried about that.
So that shift to the edge that you just heard iMac mention there, that's one of the key talking points at this conference as well, because shift to the edge really refers to on-device AI. And this is when you have that movement away from AI cloud servers to put those applications directly on the devices themselves. And this could be a further growth market, because you compare what you have for the size of the overall AI cloud server market versus the size of the smartphone, the PC market. This could really drive greater expansion, greater spending on things like chips, and be perhaps one of the next legs of the rally. But certainly, as I said, still in the first innings. That's what we're hearing again and again.
Yeah, well, AI, the NVIDIA story dominating the news agenda today, but what else is being covered at the conference?
Well, there's certainly a lot of different talking points here, Paul, today. Again, that broader question around the chip industry and also just the level of complexity to it. I was speaking with Bloomberg Intelligence, for instance. We do have our analyst, Charles Shum, on the ground here. And one of the things he's most interested about is looking at this shift that we're seeing, the advancement that we're seeing, because you can't continue to shrink the size of the chips like we've done in the past. Now it's about stacking up. And so you have this new role that advanced packaging is starting to play in the sector. That really speaks to high bandwidth memory chips in particular. And this is an industry that's being dominated by the likes of SK Hynix. Samsung is also trying to play catch up. So you've got both of those present today. That's one of the sort of key technological developments. But of course, never far away is geopolitical tensions as well. And given us we've been discussing the chip traveling thousands of miles, making multiple trips around the world from inception to finished product, there's certainly a lot of different points in the supply chain where weakness can be compromised.
Yeah, geopolitics and also perhaps some of these domestic concerns as far as NVIDIA is concerned. Bloomberg also reporting that the DOJ has sent subpoenas to NVIDIA and other companies as it seeks evidence that it has violated antitrust laws. What are we hearing about this?
Yeah, that's right. This is something as well that really weighed on NVIDIA's share price, because the DOJ headlines dropped after hours. So already we had that near 9% or 10% drop intraday. After hours, we slid a further 2%. Now, what we're hearing here is that the DOJ is essentially sent or has sent subpoenas to NVIDIA and other companies. And it's a real escalation, because in the past we've seen them sending questionnaires. Now they're actually legally obliged or binded to respond to the DOJ. What is the question here? What we're hearing from sources is that antitrust officials are essentially concerned that NVIDIA has built up quite a significant monopoly in this space. Not only are they making it harder for companies to switch to other suppliers, they could also be possibly penalizing chip companies that choose to use its or other artificial intelligence chips. That's the key focus of the DOJ investigation. NVIDIA, for its part, is saying that the reason that it's got so many customers and such a long sales pipeline really comes down to the quality of its products. But certainly these investigations and that type of regulatory scrutiny we're seeing on NVIDIA, other big tech companies as well, that is not going away anytime soon.
Right, Bloomberg's tech reporter Annabelle Jewell is there in Taipei. Let's bring in Ray Wang, founder at Constellation Research, joining us now from Cupertino in California. And Ray, I want to start off on this NVIDIA story. Where do you place the chances of an antitrust prosecution actually happening? And what would the impact of that be on NVIDIA?
Yeah, it's a great point, right? Lena Khan and the US DOJ and the FTC are all going after the large big tech companies in the US. And I think they're looking for an angle here. But the challenge really is the fact the AI market is so competitive. NVIDIA may have the lead today, but in 5 years, somebody else may take over. We've seen what happens with cloud players. And we've actually seen that the cloud market is actually very dynamic. You're going to see the same thing that's going to happen on the AI side. But this DOJ is going to have to figure out is what NVIDIA doing in terms of being able to bring together the chip market, the hardware market, the software market, pulling all together in a vertically integrated market. Is that anti-competitive, or is that actually helpful in actually bringing the ecosystem along? And I think they have to show that the consumer is being harmed. If they can't show that the consumer is being harmed, then they really don't have a case.
So what does this mean in the short term, at least with this DOJ probe casting such a shadow? Has NVIDIA stock peaked, at least for now?
I don't think NVIDIA stock has peaked. I think what we still see is an 80% growth. That's the Q3 forecast. We still see NVIDIA up for 118% for the year. But the bottom line is we are normalizing, and I think that's important. The NVIDIA DOJ subpoena is just part of this. What we're also seeing is the fact that there was a macro correction going on during the day, a weak ISM August number. U.S. jobs on Friday looks like a big worry, and this macro set off a correction, and we've got election as an issue in the background, and of course, with the show going on in Taipei, China, fears of a Chinese invasion rumors, of course, are thrown out there just to add to the mix. But the bottom line is this AI market, we are in a different era. AI is completely different than the internet. The internet was open, decentralized, lots of players, and cheaper. AI is different. It's closed. It's centralized. Only a few will win, and that's NVIDIA. And of course, it's a little bit more expensive for everybody. And that's the difference most people haven't grokked yet.
Ray, what is your price target on NVIDIA? I think it's like something in the ballpark of 180. How are we going to get there in the next 12 months? I mean, you talk about how these headwinds for the AI space are more macro or maybe geopolitical in nature, but I'm just wondering if you have the likes of the biggest customers of NVIDIA, your hyperscalers, they're going to potentially also start, capping some of the AI spending. What sort of knock-on effects is that going to pose? And then eventually, is that going to ripple through into NVIDIA itself?
April, that's a wonderful question. And what I would say is that we are probably at the peak on the data centers in about 2 quarters. But what we're not in peak is really what sovereign AI is about. And what Jensen says in sovereign AI is real. Every country wants to be competitive. And what they have to do for their citizens is invest in that capability to be able to bring their country's data together so that they actually are ready for AI. And so almost every country is going to be placing an order for their own data centers to actually control their own data. And that's going to be the next step of growth. But that's just the beginning, right? That part is the first phase. That's the compute piece. The second part is companies putting AI to use. What we saw over the last quarter was the fact that companies that had a strong data strategy, companies like Walmart, companies like Uber, were able to use AI in a way that competitors weren't able to win on. For example, Uber was able to do dynamic pricing in a way that was very, very helpful in their margins. They could do ride batching in a way that would actually meet sustainability goals by bringing more people together on fewer trips. Walmart's able to do that in terms of what they're able to do with sourcing and dynamic pricing. And that's just the second phase. And that's the boom that's going to bring AI to the next level. And the third phase is going to be different when we actually trade data in what we call data collectives. Right now, there's not going to be enough public information on the internet that's worth trading on. In fact, we're going to be part of ecosystems where we trade data. Retail, manufacturing, and distribution are going to share information into insights. Comms, media, entertainment, and telecom are going to share information on demand, on what shows are important, where signals are going to be used, and that's where we're going to take it to the third phase. But we're still at the beginning, and folks are right. This is the first innings of a cricket match, a baseball game, a soccer match, whatever sport you like.
I love the sports analogies, but can you walk us through, I mean, you talked us through all these phases in AI. How is that going to correspond directly to the NVIDIA stock as we try to get to 180?
Yeah. Well, here's what's happening, right? We're actually seeing, so Jensen's on a 2-year, 1-year cycle in terms of refresh, right? So from Hopper to Blackwell, the next step is actually going to give you the same thing on Rubin. What is actually happening is the fact that the chips continue to get smaller, the power consumption continues to go down, but the performance continues to escalate. Companies are going to be continuing to refresh on those cycles. That will get you to the base case on the data center side. The second piece, the sovereign AI piece, which we're talking about, is as countries start to ramp up, they're going to be building their own ecosystems. And the conversation in terms of semi at the moment, talking about what's happening at the edge, that will continue. We have the story on September 9th about Apple Intelligence as these things get into devices. Each one of these devices is going to play a huge role in terms of actually creating compute at the edge. And then, of course, we're going to start to build those ecosystems. NVIDIA actually is in every piece of this. They've got the software layer through CUDA, which allows them to provide that ecosystem. They've got the digital twins and the edge on the other end. They've got the gaming mechanism. And this is where you're going to see a full power of NVIDIA coming together.
Ray, it's hard to imagine a world without NVIDIA, but you did mention before that we're in the early innings of this AI story, and certainly in the early innings of the dot-com era. We did see a lot of pretenders, if you like, just sticking the suffix .com on the end of their name, and they did not survive. Do you see anything like that happening in the early stages of the AI boom?
We do. We think a lot of the players that we think are going to win today might not make it. There's some of the chip manufacturers that really don't have that capacity. We also see threats on the horizon. There's a company called Samba Nova Systems. They have 1 trillion parameters at 1/10 the cost. That's going to change and transform the market of bringing AI back to the edge or back to what we call an on-premises model, which is different than what we were doing in the cloud. And so there's going to be lots of competitors in this marketplace, which is why the DOJ lawsuit is just doesn't make any sense, right? And then, of course, we're going to see companies that are able to actually continue to compress and advance the layers, the stacking that's going to happen on the chip side. Of course, TSMC is going to be one of the winners. ASML is still going to be one of the winners. And of course, NVIDIA will be one of the winners. But the market around that will look differently.
Ray, you alluded to some of this earlier, how access to AI capabilities is going to be a key focus for governments. How do you think this is going to potentially play out as a headwind for the sector?
Yeah, so the challenge is really going to be when each government actually creates new policies on privacy and antitrust, on AI, or ethics rules that they're going to operate. That's going to create some of the frictions, but I don't think it's necessarily a headwind. What's happening right now is companies and governments are trying to figure out how to scale the maturity curve in AI. It's starting by augmenting people's capabilities. The next step is to be able to accelerate what they're doing and then get to level of automation. The goal here is really to get to agents and advisors which allow for decision automation, and that's where some of the productivity gains are going to be here. But most of the market hasn't seen that, and organizations are worried about, investors are mostly worried about at this moment, who's really making money on AI? Is it just the tools, people that are providing the picks and axes in this gold rush, or is it going to be companies that are fully scaling out? And we're just starting to see the companies that are starting to scale out using AI.
All right, Ray Wong, founder at Constellation Research. Thank you so much for joining us today. Still to come this hour, we'll speak exclusively with the CEO of Indian home textiles exporter Wellspun Living about plans to diversify their business. This is Bloomberg.
Well, time to check in on markets again. There's really just one story in town, the NVIDIA, the tech sell-off, what that means for risk appetite, that steep decline we saw in the S&P 500 overnight that had echoes of the August meltdown, the worst day we saw since the crash a month ago, and the S&P 500 futures pointing to further declines. Maybe this is not over yet. A bit softer on the dollar. We did see that gain overnight. The VIX jumping to the most that we've seen it since a month ago as well. And you can see how it's rippling through into anything that seems risky on commodities. Look at how U.S. crude futures, which just a day ago already declined by the most in about a year, extending those losses now. Of course, this is also tied into what we're seeing on demand concerns given the data surrounding US and China. Let's dig into today's market sell-off with Bloomberg M Life strategist Mark Cranfield. Mark, we knew September was going to be tricky. Did you see it coming in this bad? We're just in the early days of the month.
It feels like we've had this conversation before.
Yeah, it's a deja vu kind of thing,
But I think the outcome is going to be somewhat different. I don't think we're going to get the rebound that we saw in August. We saw that dramatic sell-off triggered by Japan, spread across the world. But this time around, we've come back from Labor Day. That's a significant change. It's a time when people, particularly in the United States, they look ahead for what's going to happen for the rest of the year. Where's our big concerns? And a couple on the horizon that don't look so promising for the markets is the fact we're getting closer to the US elections, which look very uncertain for financial markets. And also the fact I think people are becoming to realize, investors think that the Fed is already behind the curve, and 25 basis points in September is just not going to cut it. On top of that, the Fed is probably going to dampen expectations. The derivatives market is pricing something like 200 basis points worth of interest rate cuts over the next, probably into the middle of next year. The Fed's not going to like that. There's way too many, and there's probably going to be some pushback. And I think people are beginning to realize that just expectations have just got way ahead of themselves, particularly in the bond market, and that's not going to help equities.
Help us understand the dynamics that are going to be driving the dollar in the short term, because amid the risk off, we saw the dollar climb, but longer term also, it's about the Fed. So where do we go for the rest of September, you think?
And not just the Fed, the Bank of Japan. You've got this amazing contrast going on, very unusual situation, particularly in the G10 world, where you've got one clear outlier, Bank of Japan. Just yesterday, Mr. Ueda, Governor of Bank of Japan, repeated, or he put in writing, that's really the key difference. He put in writing in a statement to the Japanese government that he sees further tightening ahead, and here are the conditions for it, which are falling nicely into place in Japan. So clearly, Bank of Japan is going in one direction, Federal Reserve is going in another direction. That, from the yen's point of view, clearly means that the chances of the yen outperforming are certainly very good. Now, it may well be, if we have a risk-off scenario, if Nvidia starts to make everything worse for the mood in financial markets, the US dollar may get some haven bid out of that, but probably not against the Japanese yen, which is beginning to get traction in its own right as a separate currency. And the Swiss franc as well is heading that way as well. So we might get a divergence in the world. It might not be a uniform performance for the US dollar.
Mark, in terms of the outlook for the yen, I mean, we're talking about 145 as strengthening, and yes, it is, but on an historical basis, if you just look back over the past 5 years, it's still very, very weak. Where are we heading from here, and what's the implication going to be for the Nikkei?
Well, obviously, Japanese stocks are getting used to the idea of a slightly stronger currency. Now, if you look at where, on their annual reports, a lot of Japanese companies projected, they're all forecast where dollar yen is going to be in the year ahead. And somewhere between 140 and 150 was about the average. So we're getting close to where Japanese companies can live with the strength of the yen. Now, they may need to make some adjustments. Of course, if the Federal Reserve really does go for 200 basis points worth of cuts, then probably dollar yen goes even lower than 140. So people will need to adjust. But it looks like it's going to be a slow process. But Japanese companies have improved their profitability so much. You've got the governance has improved, their earnings, the dividends are getting much higher than they were. So there's a decent cushion there. Not to say that they won't be immune. If there's going to be a meltdown across global stocks driven by what's happening in US tech, of course, Japan's bound to get caught up in it. But in terms of can they live with the yen at these kind of levels, yes, they probably can. It would probably need to be significantly stronger to upset them.
A new normal for Japanese companies. Mark, we'll leave it there for today. Great to chat with you on a day like today. Bloomberg M-Life strategist Mark Cranfield. Plenty more ahead. This is Bloomberg. Okay.
All right, let's take a look at the Aussie dollar. It is 67 cents US at the moment, slipping a little bit after second quarter GDP numbers. They were a little bit anemic. GDP growing just 0.2% on the first quarter, 1% on year. That was a modest beat, but still not a great deal to write home about here. Bloomberg Economics saying that growth is likely to remain tepid in Australia until we get a little bit of action from the RBA. And we do have the next RBA meeting coming up in a few weeks' time. The consensus is that we might see 25 basis points of easing before the end of the year, but of course it all depends on what happens with the broader inflation picture. There you see on the screen commodities, also very weak today. We've got Brent erasing all of its year-to-date gains. We've got iron ore now solidly below that $100 a tonne level, 93.90 for iron ore futures traded out of Singapore. Having a pretty profound effect on the materials sector in Australia, currently weaker by 2.5%. The broader index off by 2%. Coming up, venture capital firm Peep 15 says entrepreneurs in Southeast Asia are more ambitious than ever. We'll speak to their managing director in a moment. This is Bloomberg.
high expectation, which also meaning that when the market taking a downturn, there will be higher level of a disappointment. Moving forward for the rest of September, how far the NVIDIA's or the AI stock could potentially taking a step backward, I think that will be something that I'm also quite keep my eye on.
I think in this type of market, yes, skittishness, but there is prospect where investors will say, okay, if the demand is still there on AI, prospects for investors to come back.
We still predict that the GPU market is going to grow by 29.9% CAGR over the next 5 years to a market worth 103 billion. So still lots of growth, still lots of upside in this market.
And by 2030, it's going to be close to 1 trillion. Now, 50% of the growth is coming from AI-enabled chips. So the AI is really fueling the industry growth big time.
Well, Bloomberg TV guests there discussing the outlook for NVIDIA and AI, and Avril just once again underscores the importance to global markets of this story at the moment. And once again, those old concerns surfacing about, well, this is very exciting technology, but when is it going to turn a profit? So a number of analysts raising questions about that again. We saw the Philadelphia Semiconductor Index take a pounding, and NVIDIA itself losing 279 billion in market value. But of course, there's this question as well of the Department of Justice taking an interest.
Yeah, absolutely. As we hear that these subpoenas were sent by the DOJ to NVIDIA to kind of get details of exactly whether there was anything anti-competitive that took place. To be clear, we're not seeing a lawsuit, and yet we actually have the likes of Bloomberg Intelligence flagging that could likely be months or even years away. But certainly this subpoena that's been sent from the DOJ is raising these concerns about how NVIDIA and other companies are in the crosshairs. And Paul, I think to your earlier point about what we're seeing in these AI froth concerns, when you have the likes of these industry analysts, JP Morgan, as well as BlackRock Investment Institute raising concerns, right? We had JP Morgan saying, for AI demand and the run-up to be justified, we really need to see this demand broadening out past the tech names. And then from BlackRock Investment Institute, that this is not something that is going to take quarters. This is an endeavor that is going to take years. So this is among the narratives that's really splashing cold water on the AI narrative. And indeed, you see some of these chip makers in the Asia Pacific that are declining. And amid all this concern surrounding the US chip stocks, I mean, you talked about Philadelphia Semiconductor Index and how it really tanked overnight. It makes you wonder the extent in which maybe some of these Asia chip names, maybe they look attractive. If you take a look at their price to earnings ratio, they're actually in line more or less with the 10-year average. So they don't look all that expensive. Now, let's also take a look at what we're seeing among the chip stocks in Japan, how exactly they're faring, because, of course, we're back from the lunch break, and we're seeing the likes of Renesas, Advantes, Tokyo Electron. They've just been partaking in the sell-off, 7-8% declines on some of these chip-related, AI-related stocks. Certainly, those concerns rippling through the AI complex are just hitting not just the AI chip-related stocks, but also the broader infotech sector. Big drag on the Asia stock gauge today, which is, having this deja vu effect, the echoes from the August meltdown. And let's take a look at how the Nikkei is faring against that backdrop. It's a bit of a double whammy for the Japanese benchmark, right? Because we see how Ueda's comments just reminded the markets a day ago of his determination to normalize monetary policy if the data backs that up. That sent the yen strengthening, and that is among the factors, apart from the chip sell-off, that is hitting the Nikkei today, 3.5% down. I think this is also the worst bleed we've seen since August, and to the lowest level since the middle of last month. Now, in other news, Peak 15 is a venture capital firm with $9 billion in assets invested across the APEC region, including India. and Southeast Asia, and they are bullish on tech with a portfolio including fintech and financial services, consumer and software companies. Rohit Agarwal is Managing Director at Pick 15, and he joins us now in the Singapore studio. So, Rohit, I know you are a VC, so that is really your wheelhouse, but I just wanted to ask you, in light of the sell-off that we're seeing in chip, the concerns surrounding AI, does that in any way shift your view on potential investments in the sector?
Avril, first of all, thank you for having me. As a venture capital investor, we invest for a very long time horizon. Typically, we are investing in companies which are very early in their journey, typically with the product or with the little revenue. We come in as a partner and then build that company with the founders over 7-8 years. So we take a really long-term view on some of these shifts, and I think AI is probably the most exciting tech shift that I've seen in my last 10 years as a venture capital investor. We think we are in the very, very early days of the AI revolution. In the long term, we are more likely to be surprised by the AI potential and surprised to the upside. We are likely to underestimate AI's impact and the value that AI could create with productivity gains, with profitability gains for companies, than to be underwhelmed by it. So we are very bullish on AI, and we are seeing across a whole set of our companies which are building, applications for customer support, applications for sales and BD, a lot of automation and delegation within the white-collar knowledge work is happening with AI, including the coding autopilots and so on. And we're seeing massive productivity gains across all of these themes, which makes us very bullish on AI and its impact over the long term.
Yeah, I guess to your point, the beauty of AI is how it can be incorporated into these different digital sectors. What are you looking at in terms of the sector-specific investments for these early-stage startups? Is it more digital payments? Is it more crypto?
So, the three big sectors that we focus on, especially for Southeast Asia and now for Australia, which is part of our investment aperture, is consumer internet, which includes everything from e-commerce to direct-to-consumer brands. This is a big area of investment for us here in Southeast Asia, with 600 million people and a massive consumption upgrade happening as the economy goes from $3,000-4,000 GDP per capita to $5,000-6,000 GDP per capita. Along with that, we're seeing fintech as and as a big area and trend. I think one of the most exciting things that we've seen recently in our investments in fintech is the innovation that is happening in cross-border fintech. We've seen a lot of investment into wallets, digital banks, insurance tech, wealth tech, but within countries. But we are now seeing a lot of innovation in cross-border fintech, and that's just with the expansion of businesses globally. You need more businesses to pay their vendors globally, more businesses with distributed teams to make payroll payments, and so on and so forth. So we're seeing a lot of innovation around cross-border fintech, which is trying to make cross-border payments as seamless, as real-time, and as cheap as the pay nows and the UPIs that we have all become used to in our local markets.
Rohit, can you tell us about some of the roadblocks or the bottlenecks that you're facing, and some of the companies that you support are facing as well?
I think from a bottleneck perspective, we are seeing a shift in companies which have been used to a lot of capital during the zero interest rate period, now making that shift to profitability, and balancing profitability and growth for companies has been a challenge, which now we are seeing many companies get to a point where they're starting to think about IPOs, where they're thinking about going public, and balancing that profitability and growth is a challenge which many founders are now overcoming as they are getting closer to going public, especially from the region.
Of course, talent's a very important factor as well in these sorts of businesses. Can you describe for us how talent's moving around the world at the moment and what's attracting founders and builders right now?
One of the things I see a lot with early stage founders now in Southeast Asia and Australia is the trend to build global companies. Founders are looking to build more and more global companies where they're starting a company in any part of the world, but they're really going after consumers or businesses all around the world. And Singapore has become a destination for many of these founders launching global businesses, especially because it is one place outside of the US where you see a high density of software companies with offices and global tech companies with presence here in Singapore, which brings a lot of talent from around the world into Singapore and Southeast Asia.
How else do you think founders can leverage Singapore as a base as we see kind of this build out and expansion in the region?
I think Singapore benefits from very predictable and favorable regulatory policies, especially when it comes to things like fintech. It's a very well-respected jurisdiction, and therefore we see a lot of fintech innovation happening. But Singapore is also in close proximity to two very big engineering hubs in China and India, and therefore we see founders that are building from Singapore benefit from having big tech centers in India or China. We also see Singapore as a hub where founders have an opportunity to be close to their customers. A lot of the US and global firms have their regional headquarters here in Singapore, and a lot of decision making happens here in Singapore, especially for software products and products and procurement in the region, which benefits founders as they can be closer to customers in their early days.
All right, Rohit, thanks so much for coming in and sharing your insights into the industry and the plans for your VC. Rohit Agarwal, Managing Director at Peak 15. Paul?
Still to come, the CEO of Indian home textiles exporter Wellspun Living is going to join us to discuss plans to diversify their business amid challenges from rising costs. That conversation up next. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You're watching the India Focus, and here is a look at Indian markets just ahead of the open. That winning streak that the Nifty has been on, 14 days now, that's a record. Probably going to snap that today, considering what's been going on in global markets. And the pre-market off there by about 0.75%. The open just over a minute away now. Now, staying with India, where the textile industry is a key pillar of the economy, but a slowdown in global demand, especially from key export markets in the US and Europe, is putting pressure on export-oriented companies. Our next guest runs Wellspun Living, one of India's largest home textiles exporters. CEO and MD Dipali Goenka joins us exclusively now from Mumbai. Dipali, thank you so much for joining us today. I just wonder if we can begin by asking you to describe for us the demand picture right now, when you see that recovering and how you're responding to it.
Hi, Paul, and hi, Avril. A pleasure to be here. So let me just tell you today, I think India is at the center for the whole supply chain right now. It's in a sweet spot. When I look at my neighboring countries around, and I think the challenges that the other countries are facing, India is definitely in that sweet spot of the supply chain. And I feel India has that opportunity. So while when I look at United States, I'm looking at the GDP growth this month is around 1.4%. Going forward, there are those kind of little challenges that we see. However, when I look at the global perspective, India still holds that space for the supply chain. So definitely, I would just put it forward to you that while the challenges are there, for us as a country, it is a great opportunity to take that kind of market as well.
Well, you're sounding reasonably upbeat. Do you have any plans for expansion at the moment? What are you looking at?
So, yeah, Paul, absolutely. So, I think let me first give you a perspective of our textile industry in India. I think, first of all, 13% of the industry's production is textile, 12% of exports from India is is the entire textile. We are looking at $100 billion by 2030 from $36 billion today, and we employ 45 million people directly and around 100 million people indirectly. This is what is the home textile industry today. Now, when I talk about the cotton now, India is not only the biggest producer of cotton, but the biggest exporter of cotton. The entire gamut of supply chain for cotton comes in from India. Now, when I talk about, again, India and as well spun, I think we see a great opportunity in the entire expansion mode in the terms of we are looking at expansion also going forward in the terms of our, integration, debottlenecking for our home textiles from towels, bed linen, bath rugs, and also flooring that we have. We are indigenizing the entire supply chain in India. However, even looking at this last mile in the terms of manufacturing in the United States of America, let me give you a perspective. While we are manufacturers in India, with 3 plants in India, we also have our warehousing in America on the West Coast, Midwest, and in the South, on the East Coast as well. And we're setting up our pillow plant in Ohio. This actually helps us to turn around, and I can tell you that it is as big an industry as the towels. And it's around $2.6 billion in the terms of top line for us in the United States of America. Huge opportunity for us. And I'm definitely upbeat about the demand globally as well. And also, for India as a market is a great story. While I'm happy to see India and the focus not only globally as a supply chain, but for India as a consumer story in India, where we are seeing that growth. The sweet spot, 7%, more than 7% growth. We are looking at inflation at 5%, but yes, looking at that opportunity here, growing in the terms of the consumer story.
Dipali, I'm hearing a lot of tailwinds for the growth in the business. I think in the last earnings report, something that you yourself flagged, though, is that growth could have been even better if not for some of these shipping and container availability concerns. How has that been in this quarter? Are those issues ironed out?
So, Avril, let me tell you one thing. I think post-COVID, the world hasn't been the same. Earlier, it was a very steady state kind of a business that we were looking at, whether it's in the terms of the geopolitical issues that you're seeing and the kind of disruption today as you're seeing in the like of Red Sea. There have been challenges and there will continue to be challenges. I think as an organization, we'll have to continue to hold on and see how we can actually preempt those challenges. Yes, they have seemed to iron out right now, but still are coming around. It is slow, but I think importance is about the analytics, looking at more planning, having that in control, preempting your complete manufacturing supply chain. I think those are very important. Looking at our warehousing in America, sending our shipment ahead in advance. I think those are things that Avril will have to continue to do. These challenges can erupt anywhere in the terms of commodity, in the terms of supply chain, or in the terms of any contagious illness.
Dipali, I guess to your point about how these challenges can erupt, I mean, I think last month and the month before, we saw a lot of political turmoil in Bangladesh. I'm just wondering, do you see, global buyers looking to India as an alternative, and has that led to more demand for your products?
So I actually spoke about it even earlier, April. I think India is in that sweet spot right now, not only in the terms of the youngest economy, and the growth that we're seeing in the country, but also in the terms of these being an integral part of the supply chain story for a lot of countries and retailers across the globe. Most stable democracy, that I must say. So yes, those challenges that you see across have been a very critical element of even looking at India as a great opportunity for a lot of people and a lot of countries as well, April. I totally agree to that as well.
Well, we often discuss here on Bloomberg central bank moves and the potential in India for some easing from the RBI. How important would that be to your business? How would that change the picture for you if conditions got easier in India?
I think absolutely. I mean, we look at a very long supply chain here, Paul. I think for us, in the terms of buying cotton, to the entire supply chain takes around 6 months when you turn around for textiles. I think even not only for me, let me not just talk about Wellspun, but I think also of the SMEs and the MSMEs who actually are the bedrock of our textile industry. I think it'll ease out a lot of working capital issues, ease of doing business as well. And also, Paul, let me also tell you, I think government is working and helping and supporting the SMEs, the small, medium enterprises. Along with that, I think the skilling. So today, if I talk about Wellspun Living itself, we employ around 20,000 people. Looking at skilling, upskilling, because now with the advent of Industry 4.0, Industry 5.0, the machine learning, AI, I think the government is really, giving that kind of an impetus on skilling of people, and that's an opportunity that we see. Skilling is again, and another opportunity is the infrastructure. So people like us investing in infrastructure for people living, the housing, and women. I think the kind of impetus the government is giving on the whole diversity in India is, I think, a huge opportunity to have the 50% of the population participate in the journey towards the 5 trillion GDP that we are very, very aggressive about and positive about as well.
All right, Dipali Goenka, CEO and MD of Wellspun Living, thank you so much for joining us today. Let's check in on how Indian markets are doing. We're just a couple of minutes into the open now. Watching, of course, for that win streak on the Nifty. Looks like it might be broken today if we're still in negative territory at the close. But had 14 days of gains on the Nifty 100, which was a record. But today, we're seeing a little bit of a dip, and we're seeing that happening worldwide. It's very much a risk-on tone on markets at the moment, following on from the big sell-down we saw in Nvidia and other tech stocks in the US. Plenty more to come. This is Bloomberg. Just get you across an alert on the Bloomberg terminal. Bank of America now cutting its China growth forecast, Avril, down to 4.8% from 5%. So yet another of these big banks are cutting its China growth forecast. I believe we don't have a single big bank now seeing China achieving that 5% growth target. UBS, JP Morgan both got a 4% growth target, and Nomura 4.5%. Bank of America going further as well, cutting its growth forecasts for 2025 and 2026 way down to 4.5%, Avril.
Indeed. I mean, this macroeconomic backdrop after the data over the weekend just reminded us how weak things are. And I think it's no surprise that we're seeing yet another large investment bank just kind of, bring us back to terms on the expectations of growth for China this year. But taking a look at the story of the day as well is what we're seeing, that sell-off continuing in Asia chip stocks. Actually, we're seeing the likes of TSMC and Samsung Electronics, as well as SK Hynix, pairing some of the earlier declines. Of course, TSMC, SK Hynix are the direct suppliers for Nvidia on a day where we're seeing a really, really, really steep bleed. It is risk-off across the region. That's it from Bloomberg Markets Asia. Horizons Middle East and Africa is next.